Tripping the Light Fandango. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of April 16, 2018. I'm recording it here on the weekend on Saturday, the 14th. And Tripping the Light Fandango or Light Fantastic is an idiom that means to dance nimbly or lightly. It's been popularized in some songs and various Broadway plays, and it seems appropriate for a trading approach to the market right now, and it's to be nimble and to move lightly, to be ready to respond pretty quickly. Some of the longer term trading techniques, back when the market was trending in a very clear direction, were appropriate then. I think now a little bit more of nimble and a light touch is required. And so that's how we're approaching the markets. Boy, there's a lot going on, and the market seems to be, on a hair trigger for news, good news or bad news, and more bias towards bad news and responding to either uncertainty or perceived bad news. And there's a lot to watch, that's for sure. So this is Saturday, and of course on Friday, the U.S., France, and the U.K. Initiated coordinated strikes against Syria, retaliation for the chemical weapon use, and aimed at limiting the possibility of that happening in the future. This isn't a forum to debate the rightness or wrongness of that, but the markets certainly are watching, and we're focused on market reaction. So Russia and Iran have pledged to not put up with that and to retaliate in some sort of way. So as the week opens, that may have people's attention, and geopolitical events can certainly cause volatility in the market. So that's something to pay close attention to, and to be ready to be nimble and to move quickly. Other than that, Big Bank kicked off earnings last week, and that was an interesting display. So here is the article in the Wall Street Journal. The headline is, "Big banks post strong results, but investors want more." And boy, this sure makes me glad I am not a fundamental trader, because it's too confusing. So JP Morgan, first out, was reporting net income up 35% from a year earlier. Record for the largest U.S. bank by assets. Pounded, down 2.71. Then Citigroup, net income rising 13%. They're down a point and a half. Wells Fargo getting hammered. Its first quarter profit rose 5%. Wells Fargo kind of makes sense because there's some stuff looming out there. And then PNC Financial Services, nation's 8th largest bank, 16% rise in earnings, down over 4%. So that's part of that is why I say I think the market is more tuned to bad news than good news, and maybe even a little bit of disbelief or not disbelief, but skepticism about what the future holds. Hard to get into people's heads, but we can retreat to the reality of price action and see how things are reacting. And even on good news, the banks were down, and we got more earnings coming out. Earnings season is picking up some momentum. On Monday the 16th, we got another big bank, Bank of America, coming out, and then M&T, not such a big player. Tuesday we've got Goldman Sachs, Johnson & Johnson, and some other big companies, United Health, coming out on Tuesday. Wednesday the 18th, Abbott Laboratories. We've also got Alcoa coming out, Morgan Stanley, U.S. Bancorp. So as you can see, earnings season is really kicking off, and we'll have some more information. The market will respond to that, and again, we will have to be trading in a very nimble fashion. Talking about the technicals and reality of price movement, so the S&P 500, I'm showing the chart here, still overall bearish. We've got a massive big lower low, lower high. Price did not go on. After the big low, it retraced, but it did not go to a new high. Then it put in a new lower low. It broke through the 200. It has reversed a little bit. Now it's trading right between the Ichimoku cloud and the 200. So whichever way it breaks out here is probably the direction for the near term. And I think given the response to information and again geopolitical events, I think there's a better than even chance of it breaking down, and if it does break and close with some momentum below the 200, that could signal the start of a larger downtrend. But it certainly could head up too. And if it breaks through the Ichimoku cloud, if we get up a good strong close up here above about 27.44, then maybe some more highs to come. So continue to be at a crucial decision point. We've been there for a few weeks, and we'll see how it plays out. Let's go ahead and take a look at gold and oil as we wrap up this week's update. So gold is in an uptrend. It puts in highs and the lows are lower, and then it puts in highs and the lows are lower, but it's also not a really strong trend, and you can see the last few months have been some consolidation, putting in some minor highs, finding some support currently at the Ichimoku cloud. So overall bullish, but not a real strong move yet. If we do see the indexes moving down sharply with some momentum, we would expect, given history and this pattern, to see this continue up. So we're actually getting into some precious metal trades with my stock advisory service, and some that have a little bit better chart set up here than gold. For a precious metal company, there's more to it than just the price of the commodity. There's a lot of other operational factors and other factors. But overall, there is some movement up in precious metal companies and mining companies and in gold itself. Let's go ahead and take a look at oil. Oil's been on a tear over the last couple of weeks. It is very bullish, and it looks like it's got a price target up between 71 and 80 on the daily chart here for crude oil futures. So that is very bullish, and that's really clear. All right, well, uncertainty continues. Certainly are interesting times. No lack of information coming into the market and things for people to respond to. Again, we got geopolitical concerns. We'll see Monday, kind of the fallout and reaction from the coordinated missile strike from Friday. We got big earnings coming out, and we will be nimble. We will skip the light Fandango and take only the very best trades, manage them very closely, and continue managing risk, managing trades, keeping the winners big and the losers small, which is the key formula for consistent profitability. As always, I welcome your comments, your feedback, and I look forward to it, and we will see you on the next update.